Okay, so let's just pick it up from yesterday, where we were talking about, what was it? Another 3 top mineral stocks. I tried to get through 10 in a day. That did not work, so we're just doing 3 at a time. They're taking about 20 minutes, which is kind of surprising to me. And we left off with Newmont Corporation, Agnico Eagle Mines Limited, and First Quantum Minerals Limited, which was pretty interesting. Now let's take a look at Kinross Gold Corporation, KGC for New York, and then Toronto's just K, which is interesting. The ticker is. Alright, so if we look at the all-time, they started in 91, and they've had some, why is it showing up like that, whatever. They've had some good moments here. 95 spiked up quite a bit from its $5, $5.50, $5.60 to $22.88. In 95, went back down to below baseline for some years. Came back up in 2003, then really hit it again. 2008, crashed. 2000, near the end of 2008, came back up in 2009, and then went back down far below. Wow. I'm basically at its 81 price range there. I wonder if they do dividends. Yeah, okay. So it looks like they do have a decent dividend, 1.44%. I'm not sure how they calculate that. Okay, so that's as of May 30th. That's probably why. I mean, they're giving back their money to us as investors, right? That's how that works. So, okay. Yeah, I don't know what these spikes really represent here. And just trading frenzies. And I'm not sure why ChatGPT thinks this is a top 10 mineral. Maybe just because they've been in the game for so long. Known for its extensive gold mining operations in the Americas and Africa, Kinross offers a solid dividend yield. So, okay, yeah, it's because of the dividend, and they've been around for a minute, mining that gold. All right, so 2020, they had $4 billion in revenue, and yeah, so they're hitting around the same revenue they were 3 years ago. Interesting, they went down 2.5 in the next year after 2020, and then they came back up a bit and finally back to their normal level in 23. Yeah, so if I went 2020, 2021, 2022, 2023, 2020 is 4.2 billion revenue. 2021 is 2.5 billion. 2022 is 3.4, and then back up to 4.2 in 2023, and we're halfway through this year, so who knows where it's gonna go next. The total expense here stays nice, well below the revenue, so that's great. And okay, right, now the cash isn't going to show up unless we look at the balance statement, which we'll look at now. And it looks like they're doing pretty good. Their total assets have stayed at 10 billion, give or take several hundred million, and their current assets as of 23 was 352. I mean, if we just look at cash, it's $198 million in cash. I wish I had $198 million in cash right now. That would be amazing. And then if we look at the total debt, it stays nicely below even their assets, current assets. Their cash equivalent, it actually was below, or very close to that. So I mean, that is kind of nice. But the liquidation that they'd have to do is pretty minimal. You know, if they're at 10 billion for the most part every year, year over year, and their total debt is just shy, just a little bit more than 2 billion. Really not that bad at all. So I'd say definitely a solid company. You know, they're not super adventurous, but it's a mining operation. I don't think they really need to, and they give back to their shareholders with what seems like a steady dividend. Not looking at any other historical data besides what ChatGPT is saying and that little blurb before. Is this okay? So here's, oh no, that is not dividend, but this showed the dividends for May. Okay, so actually let's look at that. I think we didn't take up too much time. It's only been about 6 minutes. I want to see the dividend history. Okay, so this month, 1.62% dividend yield. So I guess per share, is that 12 cents? Is that what they're saying? 12 cents per share. It's not bad. Not bad at all. I mean, what is a share right now? $8. So, yeah. You buy a good amount of these and make some money coming in. I mean, you'd have to have hundreds of thousands to really be making any money off the dividends, obviously. That's just how that works. But not bad. So the next one is Lundin Mining Corporation, Lundin, not London. Okay, so that is here, I think. Weird. You know what? I'm not seeing. Okay, it is. It's only in the Toronto market. That's why. TSE. Yeah, so they have some pretty good. They started in 96, it looks like, and they've had some decent spikes. So in 96 they posted at $1.90. In 2006 they spiked all the way up to $14. So that's quite a lot right there. That's a 7x. And then they went back down to the same below. Wow. So in 2009, I mean, they really hit a low. But see, it depends. If they are good at handling their money, then it's all good. And it is a mining corporation, a significant player in copper mining. Lundin also produces nickel, gold, and zinc. Now, I don't know, when we looked at another one that said zinc too. I'm kind of curious to know, is this the kind of zinc that you could use for supplementation? Is there other applications? That would be good to know, obviously. In this case, we're just going to look at the financials like we have been for the past few days. But another time, we'll probably dive into these to see what their applications are. Maybe with the same stocks, maybe with other ones. Also, let me know if you want me to look at something particular, talk about it, read about it, learn about it together. But for now, looking at the financials is what we're going to do. And it seems like they stay about $14 at their highs, and they can sustain periods of low stock prices. Well, I mean, higher than what they opened in 96, but not bad. Now, if we look at the financials here, their total revenue 2020 was $2 billion, 2023 $3.3 billion. So it's going up each year. Set back in 2022, but again, I think 22 and 21 we were seeing losses. as far as the financials go. And their debt's increasing too, but again, it is staying well underneath the total revenue. You got 1.6 in 2020, and the total revenue 2 billion. So that's good. That's a 4.4 billion, 400 million difference right there in favor of revenue. And then in 2023, a 2.8 billion total expenses at a 3.3 billion total revenue. So that's also fantastic there at 500 million in difference. So they roughly seem to take about the same for total expense versus revenue. I mean, actually 2021, let's look at that. Yeah, 2021 is actually a really great year as far as revenue to expense, because if you look at the expense, it was 2 billion, and the revenue is 3.3, so that's a 1.3 billion difference from revenue to expense. Not sure how they took that and used that, but when we look at the balance sheet, I'm sure we will get some more insight on what happened there. So let's look at that year. So their total assets jumped up. I wonder if their cash and cash equivalents, or just cash, had a nice healthy bump. Yeah, actually it did. And it looks like they pretty quickly turned that around from cash to something else after 2021. And okay, yeah, 500 million. So it does seem like they like keeping their cash to 100 to just under 200 million for cash, just cash. Because as you can see, this spike that happened in 2021, giving them about 500 million, only remained during that year. And then the next year, it went back to their baseline of between 100 and 200 million for cash. And then total assets didn't make too much of a difference there, but again, we'd have to look at let's look at their total debt there. So okay, yeah, wow. So that was just a winning year. As you can see, I mean, this is kind of crazy. They seem to carry, a decent amount of total debt, but really quite a small amount of total debt compared to their total assets, which I love to see that. Maybe not everyone does. Fast and hard can be good, but slow and steady can be great too. 200 million total debt in 2020 and 7 billion in total assets. And of that, in that year, oops, I'm looking at the liabilities, which liabilities are something that's good to look at, but we're not even going to get into focusing on that. The total debt was just, they had enough cash to almost cover their entire total debt for 2020, and they definitely had enough to cover it in 2021. But I'm thinking the way that this is probably done, they probably look different in a certain part of the year. Obviously, that your debt changes month to month, right? It depends on the kind of debt you have. Some of them are a couple of years, 30 years for mortgage, all that jazz. But as you can see, this was the lowest total debt year in 2021 when they had that huge supply of cash which went away. So they probably paid it off, paid it way down, and then went back to this baseline. They did jump up a lot in debt. So that looks like an attempt to expand, which it'll be interesting to see how that pans out. They're fine, they might have to liquidate some stuff because they did go up. In total debt, that's a huge jump. Unless there's something, I don't know. We don't have all the historical data here. Maybe this is a normal move for them every so often. But you go from a total debt of, what is this? 197 million 2020, and the next year you're posting a total debt of 1.485 billion. So you're going up by 1.2 billion in total debt in a year, and you are getting a revenue, or, well, you're getting a total assets that you have to just $2 billion more than the last year. So they must have bought some equipment or something else that's just worth that much money, unless they're counting their employees. But I don't think that's how that works. I think assets, I don't think you count people as assets, right? That would be kind of weird. But if we look at, that's the TTM, the trailing 12 months, but we look at 23, let's see if there was a spike in revenue. No, there was not. There was not a spike in cost to gross profit. I mean, their cost of revenue didn't really change. So it's interesting to see that, and that is kind of making me think that's what we're seeing here. So they must have bought some big asset that just increased, and maybe, you know, some other things, lots of different, maybe more mining equipment. Maybe they expanded out to other mining operations worth about $2 billion or $1.2 billion to increase that total debt. It's kind of hard to say without looking at the exact books, but I think this is a really interesting little case study here for Lundin Mining Corporation. I'd say they do great. I wonder if this is another one of those dividends. We didn't even look at that for the other ones. Yeah, so this, wow, okay, so that's a 2.36 dividend. And yeah, that's not like a huge yield, but you're also getting growth, like to some extent. Not a huge growth from 96 when they opened. And it definitely takes some hits during the economy. I think it looks like, so 2007, I can't remember all the things that were happening here, but I believe this was a bubble, or, you know, around here. So obviously you're going to get growth. They're trying to expand. We saw that with that extra investment, which they might turn around and have to liquidate if things go bad. But if it doesn't, or if they can get a good foothold, then this probably will just keep going up. I mean, it really depends on investor sentiment on them. They might go down a bit, but as long as their financials are strong, as that is what the business is, right? A business is in the business of making money at the end of the day. Then it doesn't matter what the investors think too much. I mean, I am an amateur at this. I'm just pulling off from what I know personally. So we might actually get through 4 today. We'll see. I might not push it though. I might just focus in on the last one on its own. But that was the Lundin Mining Corporation. Now we're going to go to Barrick Gold Corporation, another one that I actually am invested in at a small rate. And I think that they, let's see, another giant in the gold mining industry. Barrick has a strong portfolio of Tier 1 gold and copper assets. And if we look at, I don't know did this freeze? Let's just try to refresh that. I didn't lose my internet connection, but you know what? We are experiencing a technical difficulty. Okay, I think we got back. I think we came back online. Whatever that blip was. Except this Historia. So it's hard to tell if I'm just gonna do a Google search here. No, okay, so something's up with Yahoo Finance, it seems, which is fine. I'm going to close that, and then I'm gonna reopen it in a second here. Let's just do that. There we go. Okay, Barrick Gold. I'm gonna hit the financials again. Or no, I wanted to see that summary, unless that's what's causing it to be weird. I mean, it kind of looks like it is. It's the only thing that's okay. You know what? We're gonna do gold stock. We'll look at it from a different place and get the max here. All right, there we go. So Google for the win. They started in 2018. Well, that doesn't sound right. I am pretty sure they've been around for longer and public for longer than 2018. Well, you know what? Who cares? We're not really interested in that anyways. So we'll just get back to talking about the financial statement here. So 2020, 12.5 billion in total revenue, and then the next years to 2023, 11 billion, give or take a few hundred million, right? And then the total expense, riding close, but not that close, 8 billion in 2020, and about the same 8.5 in 23, and that's 3 billion below their total revenue. So they're doing fine as far as I can tell. I'm sure there's more to dig into besides that, but we're going to keep it simple for now. And then if we look at the balance sheet for Barrick Gold Corporation, we see 46 billion in total assets. How much of that is cash and cash equivalents? I would love to know. Wow. So they have $3.7 billion in cash. And then cash equivalents is 1.4. I don't know how long they have. Okay, well, that was 2020. But they hold a large amount of cash, just cash, about 3 billion. Between 2.9 and 3.7, depending on the year. This past year was $2.9 billion in cash alone, which is good. I mean, for bad times, you have a lot of cash to sit on. Your business should be fine, regardless of what the government does or anything like that. And then maybe they just learn from the hard times, right? We could probably all take a lesson from that. And their total debt's actually been very steady year to year. At least for, well, again, this is just 2020 to 23, but the total debt goes from 5.3 billion to 5.2, so even less this year. They like keeping a low debt, especially considering their total assets and even their total cash. They could pay out most of that debt with the cash, and the cash equivalents would cover it. So the cash and cash equivalents would just cover, well, except for this last year, but it doesn't matter too much. I mean, what are they going to sell? Some mining equipment? I don't think it would destroy their operation. 45 billion, that's pretty healthy. Now, what about their dividends? I'm pretty sure, 2.4% dividends, that's quite healthy. Quite healthy, I don't know. I like that. I don't know if it's quite healthy, but I do like that. Anyways, that is it for those 3 mineral stocks. And again, if you want to hear more different kinds, not just mineral stocks, we'll go into ETFs, bonds, pretty much anything. And I'm a total noob at this. I just find this fascinating. I'm investing, been doing it for some years now, been trying to up my research game. So that's what I'm doing here. I hope you all have a great day. Talk to you later.